You can toe the line when it comes to investing. Choose the stocks you like one by one. Or select Sector SPDR ETFs and add the diversification of an entire sector of the S&P 500, like financial. With liquidity, all-day tradability, and transparency. Ready to add diversification to your equity investments? Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to sectorspiders.com for a prospectus containing this information. Read it carefully. Visit us at sectorspiders.com.
Well, let's talk about socially responsible investing 2.0. I'm Ron DeLegge with ETF Guide. Glad to have with us Shilpa Andalkar. She's with a company called HIP Investor. They're based in San Francisco, California. Nice to catch up with you.
Thanks for having me.
Well, let's begin with what is HIP investing and how is it different from traditional socially responsible investing?
Absolutely. So HIP investing is a quantitative, metrics-based way of assessing the intangible value of a company or investment across health, wealth, earth, equality, and trust are the dimensions that we look at. And so these are ways of looking at environmental and social and human impacts of the investment or the company.
So it sounds to me like it's kind of a multi-factor approach to investing?
Absolutely, yeah. So the way that it differs from socially responsible investing is socially responsible investing tends to screen out or use an exclusive strategy, whereas impact investing is about quantifying across the companies, all companies in the universe, more of an inclusive.
So let me ask you, Shilpa, what is it about screening stocks using the HIP investor methodology? Why do you think more investors should be looking at this for their own portfolios?
Absolutely. So it provides a way to quantify the intangible value or the invisible assets, things that may not be, visible on the financial statements. So the health and happiness of your employees, the energy use, and the overall the transparency of an organization.
Makes sense. Yeah. One last question before you take off.
Sure.
What type of growth opportunities do you see for HIP investing?
Yeah, great question. I think that one thing that investors don't realize is that this may only be able to activate a portion of their portfolio or their investments, whereas HIP Investor sees this as a way to apply impact across all asset classes in a portfolio, and there's opportunity for all types of strategies to help activate each asset class. So from cash to fixed income to private equity and debt deals, as well as hedge funds and commodities. So we see it as a place to really grow.
Very good.
Across the board.
Excellent.
Yeah.
Well, you heard it here first. HIP investing, we could see ETFs tracking HIP indexes. Stay tuned for that. You just heard from Shilpa Andalkar with HIP Investor. I'm Ron DeLegge with ETF Guide. Thanks for joining us.
Thanks, Ron.